watching Chairman's Briefing, and I'm Rachel Lee. This episode is brought to you by TAG Oil. Let's get started. The U.S. economy contracted 0.1% in the first quarter, which is better than the expected 0.3% decline, and gold rallied on continued recession fears. Trade imbalances drove the contraction as imports surged while government spending fell. Consumer spending growth slowed to 1.2% from an initial estimate of 1.8%, signaling weakening domestic demand despite the headline improvement. Prices keep rising even as the economy shrinks. Core inflation actually increased to 3.5% from the previous 3.4% estimate. This creates the worst of both worlds, a stalling economy with persistent price increases that squeeze consumers. Gold held critical support above 3,300 and attracted buying on the initial data release. Despite the better-than-expected GDP revision, the underlying components suggest that economic momentum is fading while price pressures persist, supporting gold's appeal as both an inflation hedge and recession play. Ivanhoe Mines faces a growing crisis at its flagship Kamoa-Kakula copper complex in Congo. What started as a temporary suspension due to seismic activity now threatens to drag on for weeks. Seismic activity means that underground tremors are caused by mining itself. Extracting massive amounts of rock destabilizes surrounding formations, creating vibrations that can collapse tunnels. The company initially downplayed partner Zijin Mining's warnings about missing production targets. Now, Ivanhoe admits that the structural damage could derail their annual guidance completely. Operations remain suspended after fresh seismic events forced another evacuation last weekend. Preliminary assessments suggest that activity could continue for weeks, keeping one of Africa's most important copper mines offline during a critical supply shortage. Franco-Nevada just spent $1 billion to acquire a 7.5% royalty on Ontario's Côte Gold Mine. This represents one of the largest royalty deals in streaming sector history. A royalty means that Franco-Nevada pays massive upfront cash for a percentage of future revenues. They take on financial risk but avoid operational headaches. The operators are IAMGOLD and Sumitomo Metal Mining, and they get immediate capital while Franco-Nevada gets steady cash flow if the mine succeeds. For Franco-Nevada investors, this acquisition significantly boosts exposure to North American gold production. The billion-dollar bet here signals management's confidence in long-term gold fundamentals as prices hover near record highs. Shortly after receiving a final federal permit for its Stibnite gold project in central Idaho, Perpetua Resources applied for $2 billion in government financing to develop it. This could become one of the largest federal mining loans ever approved. The timing here is critical. China blocked global antimony exports in 2024, cutting off America from a mineral that's essential for military ammunition and defense equipment. Stibnite would become the only domestic antimony producer while generating significant gold as a bonus. Oil remains one of the most reliable and indispensable energy sources in the world, powering economies, enabling industry, and driving daily life forward. It's also a foundational fuel that's essential to making the global shift toward a lower carbon future possible. TAG Oil is strategically positioned in this sector, advancing its Egyptian assets with an estimated 500 million barrels in place. Led by Executive Chairman Abiy, whose regional track record speaks volumes, TAG is unlocking overlooked resources through horizontal drilling. A recent independent reserves evaluation suggests that the Abu Rosh F target in Bed 1 alone could hold over 500 million barrels of oil in place. Under Trump's emergency declaration to restore American energy, the Velvet Wood Mine becomes the first uranium project to be approved by the U.S. government. Anfield Energy's Velvet Wood uranium project got its environmental permitting in just 14 days. That represents a major shift from the typical years-long approval process that has strangled domestic mining for decades in the U.S. Interior Secretary Doug Burgum called this a turning point in how we secure America's mineral future. Anfield operates a uranium mill as well, which gives them immediate processing capability. While uranium prices have already surged on geopolitical tensions, this policy shift could trigger another leg higher as domestic production is expected to ramp up. Investors might want to watch whether other uranium miners receive similar fast-track approvals in coming weeks. The Supreme Court just handed Rio Tinto and BHP a massive victory by refusing to hear an Apache tribe's appeal to block their Resolution copper project in Arizona. This removes the final legal obstacle for what will become North America's largest copper mine. Rio Tinto and BHP have invested over $2 billion so far into the project, which sits on the world's third largest copper deposit. Once operational, it could supply more than 25% of American copper demand for decades. This victory fits Rio Tinto's broader copper strategy in a perfect way. The mining giant is building a global copper empire with projects in Mongolia and Peru, plus innovative extraction technologies to squeeze more metal from existing operations. Barrick is facing its worst nightmare as Mali's government moves to take control of the Loulo-Gounkoto mining complex. A local Malian court will decide on June 2nd whether to hand daily operations over to government administrators. The standoff has been painful enough for Barrick. Mali seized 3 tons of gold in January over tax disputes and detained 4 company employees for over 5 months. Gold exports have been blocked since November, turning a billion-dollar cash cow into a massive money pit. Barrick burns through $15 million monthly, keeping the shuttered mine on life support, while losing $1.24 billion annually in revenue. The company doesn't want to put the site into full care and maintenance, even though it would be at half the cost. This is according to CEO Mark Bristow. Now, Barrick has been operating in Mali for nearly 3 decades. And pretty soon, we'll find out if Barrick is forced to walk away. And that's your briefing for this week. If you're not subscribed yet, please do so before you go. I'm Rachel Lee. We'll see you next week.